It's not hard to come out short against this industry, but they're coming out against good names like Coinbase and Silvergate. And these companies have gotten nailed here much more further than what Bitcoin has declined, especially lately. And these are U.S. regulated companies. This isn't like Binance. This isn't FTX. This isn't when they have, you can't see the financials. No. They must show their assets, their balance sheets. U.S. regulated companies report their numbers every single quarter, have analysts deeply covering these stocks. Could there be something under the hood or someplace else? We saw that during the credit crisis that they're able to hide things. But right now, these companies are being more transparent than ever. Their CEOs are going all over the media saying, ask me whatever you want. I mean, take Silvergate. We have big name short seller Mark Hodes who's saying it's a fraud, which he claimed that FTX was a fraud and a good track record of being a good short seller. So he says he's got a big position in it, which he disclosed. And he says, I'm quoting here with Silvergate, he goes, it's crazy. And he put this thing out saying that FTX exposure is only $1 billion of deposits. If there's a run on the bank and the U.S. government wakes up and started kicking the tires of this bank, they're going to realize they have no know your customer process on their system right now, and they have no anti-money laundering on right now because FTX is a criminal operation cut and dry. That's what he said. So he's also said that on Twitter that, I'm quoting, that Sam Bankman-Fried admitted on record that funds meant for FTX were wired to Alameda because FTX didn't have banking access. So it seems to be a matter of time before regulators tape off this crime scene. He says, but if this happens to be true, and he's claiming he knows things that are not on the books, then, look, SI, could they go under? I don't know. But for me, when I'm looking at it, and it's, you have to look at, these are U.S. regulated companies. FTX is a different story. You ask them and they'll give you different answers. You have no idea what's going on. These guys have to disclose every single number, every single thing. So when I see some of the arguments that he's making here, I don't understand about know your customer, and I don't understand about, the anti-money laundering, and more important, just the wire transfer. I don't understand. Like if that's a short thesis. Because if I have assets at Bank of America through Curzio Research and I tell Bank of America to wire money to one of my subsidiaries, I'm not sure what the problem is. Bank of America would not be held liable for that, even if my subsidiary was a sham, because as Alameda has the banking credentials which are needed to get a wire, right? So I don't understand how that impacts Silvergate. If FTX has an account, that, again. But I'm not sure I understand that thesis. I would love to get him on here to see if he explains, because I want to get this story right. I want to see. This is how we made a ton of money on. We did very, very well on in our crypto portfolio. Again, a lot of things are getting crushed, to be fair, just like everything else in crypto. But that was when we sold out of and did incredibly, incredibly well. I believe in the single digits or close to that, but we did very, 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 very well in it. And this stock was trading at $225, 52-week high, and it's now at $25. And he's pounding the table at $25. And this is his thesis. So I'm not sure how the wire transfer, but now let's go into KYC, because I'm not sure if Cohodes understands what this is. I do, because my investors had to go through this process 3 times with our Curzio equity owner security token. That's what you do with security tokens. You have to go through all of these processes, and you're supposed to do it even through utility tokens. You have to know your customer, anti-laundering. You actually have these checks on when you open a regular brokerage account. You just don't know it. If you open up a brokerage account and you have felonies and warrants for your arrest, if you open a brokerage account, within a couple of hours, someone's going to show up at your door and try to arrest you if you have your address, which has to list, right? That they do all these background checks behind the scene. But they make it very specific, like this is what you need to do, especially in crypto, right? This way you avoid money laundering and all this bullshit. So you have to know your customer. So we had to do it when we started to securitize, when we first raised money. Then again, we went to Merge Exchange, International Exchange, and we said we want to be on a U.S. exchange, T0, and then they had to do it again. And we were pissed because it's the same people going through the same process, but we're like, hey, this is what you have to do. This is the process. That's fine. But anyone signs up to T0 right now, if you sign up and say, well, Frank, I want to buy your token, I want to buy your company, it gives you a direct equity stake in our company, just like a stock does, and I want to buy it, you go to T0, they're going to do these checks. They automatically go through that process. But thank God, with crypto, and now it's a very quick process. It could be 15 to 30 minutes, sometimes even less. 2 years ago, it took 2 to 3 days. It was a real pain in the ass. They had to go through this stuff. But anyway, when we look at KYC, and I want to bring this up here, because he's saying that KYC that FTX basically doesn't have the KYC and they're not checking their customers, or Silvergate's not checking their customers with KYC and AML, anti-money laundering processes. KYC, when I look at it, this is what it is. They do an initial due diligence, right? So you have to have executive summary. They do this automated, your company description, target customer, operational needs, reputation. So they'll go through like customer complaints, pending prior litigation, which FTX, every one of its customers who went on the FTX platform had to do this. And they were one of the largest. They're one of the largest in the space. They're the fourth largest. The compliance review they have to do, confirm money, registration, licensing, all that stuff. Information, security. Then they do like monitoring and stuff like that, which a lot of these hedge funds, maybe they didn't look too much under the hood or whatever, but for this process, they're looking at one of the largest players and saying, okay, you're good to trade, which everyone was okay with, right? But you're doing all this fraud under the hood of things that you don't know, and he's saying that Silvergate should be held liable, and not only liable, that this is a company that is fraudulent. I don't understand that process. There's not one person and one bank in the world that wouldn't have proved FTX and all their business through KYC. And if you're making this argument, you could make a much, much bigger argument for the 15 large hedge funds that all invested in this company who was supposed to do even more due diligence, because this is an automated process. And we had to go through it. And again, we could be hiding money and stealing things and doing crazy things and easily pass this test. But to say that they're not doing it, or they're doing business with someone who's a fraud, and when everyone was a fraud, a lot of people got fooled. You didn't shut down all the banks that lent money to them, did you? Because you really didn't know what was going on behind the hood, right? They were able to hide it. They were great. They had accountants. Even Arthur Anderson was involved and didn't catch it. One of the big four. There was only big four accounting firms. They were one of the big four. And then, of course, changed their name and changed the industry. Now there's a lot of big names. So when I look at Cohodes, who's a reputable person in this space, and again, I would love to get him on an interview. I'm going to reach out to him to see, because I want to ask him these questions, because again, you want to get it right, because you're shouting at top of rooftops that this stock is fraudulent, which, again, to be honest, it doesn't matter if he believes that or not as a short seller. His job as a short seller is to go crazy on Twitter, call a company a fraud, shout negative things to the rooftops, because even if you're wrong, so what? You did a great job pushing the stock much lower. You're short. You could be out of it right now. Nobody knows it. I mean, I always argue that as a short seller, you can do almost anything you want and claim that everyone's fraud, whatever, and you'll read the disclaimer on the bottom and it'll say, well, it's believed to be that the sources I'm using are reliable, but they're not meant to be reliable or whatever. I may be out of this position and all this shit. You could destroy someone's reputation pretty easy and be wrong, make a fortune on it, get out of it, and there's no consequences for calling out a management team. Because you're not just saying, hey, this business is bad and I'm shorting it. You're saying it's a fucking fraud. That's different. So if you're saying it's a fraud, you need to show much more proof than what you've said so far, and I haven't seen it. Doesn't mean he's not right. You can give him the benefit of the doubt because he's a good short seller. I'm just saying, shorting it here, it's very easy to short names in an industry that's blowing up, especially when they're stocks. It's not easy to short cryptos, but stocks is very easy to short. That's what you're seeing Coinbase get wrecked. Even though they have $5.5 billion in net cash on their balance sheet, even though these companies, and same as Silvergate. Silvergate is regulated by the Federal Reserve. They file quarterly results. You can see all the numbers. Reserves are in U.S. dollars, holding U.S. dollars. CEOs on TV like crazy, telling everyone, look, if you have everybody removing their money from this, which is, what short sellers could actually do, it is a bank and have run in the bank, or if crypto goes a lot lower, this company can go under, but it's not going to be due to fraud. It's going to be due because the industry's coming. It's a big difference than if you're calling fraud. You could say, when it comes to Coinbase, I think when you look at Chanos is shorting Coinbase, saying like, look, the crypto industry is going down. They're going to see less people trading on that platform. It's going lower. I think he's been short for a while. I don't remember him using that Coinbase is a fraud. It's hard to prove a company is a fraud that trades on a New York Stock Exchange. It happens, but it's rare, guys. It's really rare. Fraud, we're talking about. It's a big word. Again, a short seller could throw that word out and there's no consequences. But I can tell you, Bitcoin holds 17,000 and goes higher. I don't know what the risks are for going lower. I'm thinking everyone who owns crypto is going to sell Bitcoin, probably sold it already. But yet you have trillions of dollars that are going to be open to this and able to buy it here. Is it going to be volatile? Of course it's going to be volatile. Take a liquidity out of the system. There's less traders, but a lot of these companies now, even Coinbase, most of their money's institutional. But I look at Silvergate and the CEO. I mean, the SI, they said they have 10% exposure to FTX. So about $1 billion of its $11 billion assets. I'm not sure where the fraud comes from, but I would love to get this explanation. Because again, could he be right? Absolutely, he could be right. But what does he know that nobody else knows and the regulators know and that Federal Reserve doesn't know? And believe me, after FTX, they're ripping those companies apart to make sure that every number is accounted for. I love CZ, but I thought it was kind of funny when he kind of ripped. It was a tweet that he said about Coinbase saying, oh, they might have exposure to FTX. And then he deleted it and he talked to them. And I was like, wow, that's pretty funny because Coinbase is U.S. regulated. You see all the numbers. I don't see all the Binance's numbers. He said you're going to provide them, but I think you pretty much need to see them, especially in this market where a lot of smart people were fooled. And you can go back and say, wow, I can't believe you saw this. I can't believe this. I can't believe that. That's fine. Everybody comes back and plays Monday morning quarterback. But bottom line, nobody really saw this coming with FTX. Nobody saw it coming. When I look at this and look at crypto, I mean, put together a list of names that are going to be survivors. I'd spend a little money actually buy calls on Silvergate because we hold here and Silvergate comes out, or you have somebody that's huge in the industry and a massive fund come in and say, hey, I analyze these numbers. I analyze these banks. Warren Buffett invests in banks. He hates crypto. So that would be a bad example. But if you get a big name saying, hey, we looked at these numbers and they're good, this thing's going to pop by 200% like nothing. And it'll still be down 60% from its highs. I talk about a $25 stock that was $225. Should have been cut in half? Absolutely. Everything in crypto should have been cut in half. You've seen demand come down, Bitcoin come down. But if you think that this is the end of crypto, are you crazy? I mean, Ethereum, there's a lot of shit out there. We've been very clear on this, saying 90% of this industry I'm looking at is absolute shit. It's garbage. I can't find anything on it. You can't even see the guy's picture for the management team. They have a profile, LinkedIn, no picture. I'm like, what the hell's going on? If you have great ideas, you want everyone to know who you are. You want to be as transparent as possible in this industry. So every company I deal with crypto, I tell they have to be transparent. I need to see your numbers. If you're not showing me numbers, if you're not being fully transparent, goodbye. And this is before FTX. Now, forget it. Anyone's going to invest in these companies needs to see everything. That's why it's important when we have Coinbase and you have Silvergate, or if you have some of these players. If you're doing the right thing, these are the survivors from the dot-com era. The companies that had enough cash on the balance sheet and didn't leverage themselves. Again, people forget when that market crashed, people rip it. The internet's bullshit. It's garbage. I told you it was bullshit for the last 5 years. Even though it went up, we told you. Incredibly overvalued. Really? Because it's still one of the greatest innovative technologies. You still see, I mean, you look at streaming. How old is streaming? Streaming's not that old. Social media's not that old. I look at how much we in cloud in the past 8 years. Now look at AI, everything. Faster speeds, faster internet, faster data analytics. So you always see resets in these huge growth markets, what we're seeing. It doesn't mean you throw fraud at it. It doesn't mean like, holy shit, man, this is garbage, I'm getting out of it. Right now is a good time for your aggressive capital to find out the companies that, hey, I think are going to do pretty well. And aggressive capital is say you have $5,000 that you're willing to lose. Because this is an area that you could quadruple this money because, again, if you're a short seller, it's easy to shout from the rooftops and say, oh, Coinbase is done. Silvergate is done. They're horrible. I didn't see FTX. I didn't see BlockFi. I didn't see Celsius. I didn't see any of those CEOs. 3 Arrows, Alameda, go on TV defending their companies. I didn't see any of that. They just freaking went into hiding. But now, I mean, you talk about two transparent companies here. And again, if it's fraud, you got to find that fraud. You got to come out with it because you're saying the Federal Reserve and those regulators are a bunch of assholes and asleep at the wheel right now because they don't see what's going on. And maybe you're right. And he is a good short sell, but I'd love to have him on and question about this. Because for me, I'm more inclined of buying calls here, risking losing $5,000, knowing I could turn that $5,000 into $30,000, $40,000, than outright shorting the stock here when it went from 225 to 25, based on the two things you said, which I'm very familiar with, KYC, AML. I mean, they're not going to get in trouble for that. Do they have it on another? They have to have it on their clients. It's automatic. They have their Silvergate Exchange Network, which is for institutions who want to buy and sell Bitcoin. They have their reserves in US dollars. They're not trading Bitcoin. They're not leveraged. So could you pick it apart? Yes. Could crypto go down? Could Silvergate go under if Bitcoin goes to 10,000? Maybe, but it wouldn't be because of fraud. So if you believe in crypto like I am, especially like Fidelity is, especially like BlackRock is, especially like institutions where they know Bitcoin's not going anywhere. The whole world is going to be digital soon. In 20 years, everything is digital. I mean, holy shit, how much is digital now? You see digital sales are still going up. I think they were up 40% or something, and mobile sales up to, just getting more and more, right? As we get older and older, everyone is just 100% growing up in a digital world. But Ethereum, NFT, smart contracts, again, I'm going to be in Miami. I mean, some of these projects are made, these are smart contracts. This is your way to validate ownership. You own it. It's on a blockchain. Nobody can do anything. Nobody can touch it. I mean, it's massive. It's massive when you see the opportunities that are kind of come out with NFTs. I'm not talking about JPEGs, and there's going to be a lot of art in the place I'm going. But just gaining access to certain things. And there's lots of great ideas within NFT projects. That's why I want to start a newsletter around this. And yes, you say, well, volume's down. A lot of these things are getting killed because a lot of them are bullshit. I mean, they're basically art pieces that you're going to own. But if NFTs, what's the necessity behind an NFT? Because when people pitch me projects on NFTs, I'm like, what's the necessity here? Just like in crypto. Oh, we're going to be able to store everything in a blockchain, all these files. Well, you can do that for Dropbox for like $6. That doesn't solve a problem. But NFTs giving you special access, eliminating people like Airbnb by creating NFTs around all your houses and real estate and projects and ownership. And saying, hey, I own 5 mansions here, and if you buy this NFT and I'll sell it to 500 people, you have access, you set up the weeks they have access, and it's all on the blockchain. Don't need lawyers, don't need anything. That sounds like a pretty good idea. That's really cool. I save a ton of money. Why do I have to go to other platforms and share my revenue? Simply because you have a good software program. That's why you see money pour into blockchain. That's why you've seen all the major companies investing in the word that's so bad now is the metaverse. Because the metaverse isn't this video game. It's the ownership of your own content for the first time. Your own content digitally for the first time ever. You don't have to build things for Meta or Amazon or whoever, and then they make $50 million off of your idea and they give you a check for $400,000, which a lot of people would take. But you know what? If you created the idea, would you rather get the whole amount? Now you can create these ideas in different worlds and do different things and sell different products. And it's all creativity. Well, all these kids who are under 20, they're all developers now. Hey, look what they do in Minecraft. Look at my kids, your kids, when they sit down, what they do in Minecraft, what they do at Fortnite, where they're building stuff, right? They're creative. They're doing with Roblox. I mean, this is serious stuff. It's not just a video game. Everyone going in and saying, I don't understand. I'm not going to spend my time in the metaverse. You are spending your time in the metaverse. Metaverse is basically going on your mobile and going on different applications. This is going to provide a much better experience. You're going to have ownership of your content material. It's going to be more fun. You're not going to be monitored. They're not going to steal your freaking data and sell it to the world anymore, which is crazy. Shouldn't you be getting paid for that? That's why you're on all these social media platforms absolutely for free, because they just take everything from you and sell it to advertisers. Now they're getting crushed because of Apple's privacy policies. But this stuff's not going away. NFTs aren't going away. Ethereum's not going away. Bitcoin's not going away. So you want to find out the companies now, a lot of short sellers, it's easy to come out and just say everything's a fraud, especially when you had how many high-profile bankruptcies in this industry. And it's tough. But you got to figure a lot of leverage has to be out of the market right now. There's going to be more exposure to FTX as we go a little further and more hedge funds. But there's a lot of money on the sideline that wants to come into Bitcoin, that wants to come into Ethereum. And man, at these prices, I'm just surprised. I thought Bitcoin would be at like 12,000, 13,000 now. And it's not. It's holding up. And you're going to see trillions and trillions of dollars have access to Bitcoin for the first time ever. And it's $1 trillion market cap, strictly retail. It wasn't institutional. Now it's institutions. That's another thing with Silvergate. Silvergate deals with institutions. These institutions do these checks. They have to do these massive checks. You say, well, they messed up with FTX. These guys invested in 600 companies. They messed up with FTX, yes. Became very large companies. They usually do due diligence. They didn't there. But when it comes to banks and dealing with banks and institutions and large firms, there's a lot that has to go through there. Because if you get that wrong as a bank, as a fully regulated entity, you're in a lot of trouble. So to say that they're a fraud, and you've seen the CEO and everybody go on TV, I don't know if they're a fraud. Could they be? Absolutely. I could be wrong on it. And it's, I wouldn't say it's, a coin flick, yes or no. But I know there's short sellers that have a clear interest in pushing the stock down, that are going to go and shout at the top of the rooftop, say anything they can to make sure it goes down, and you really never don't have to know their position. And market always could have blown out his whole position right now. You don't know. Or he could be doubling down and saying it's going to go to $1, it's going to go to 0, whatever. But I want to try to interview some of these guys and the short sellers. And he's been going on a couple podcasts. I'm going to reach out to him. He's a big fan of T0. I like him. For me, as an analyst and someone that covers this stuff and looks at the numbers, I want to see what he sees. Because what he's saying on Twitter doesn't gel with a company that's fraudulent. He's not providing enough evidence for me to say that it's fraudulent. I haven't seen it. He's saying, wait and see, wait and see, wait and see, wait and see what? And there's companies that didn't, that's what happened. BlockFi didn't have, I think, they didn't do KYC on a certain amount of clients or whatever, and they had to pay a fine for the SEC. That's a mistake. It's not fraudulent unless you're actively caught laundering money, country through country, drug dealer by drug dealer. Which again, this is a U.S. regulated company. You have to show a lot more than that. But right now, the point of this is start looking at crypto. Start looking at things that you can say, I'm just holding it, I'm not going to look at it. Because this is an industry that's changed the world industry. This is where the innovation's coming from. This is where a lot of the biggest technology companies are investing in right now. Billions of dollars investing in these technologies. There's a lot of shit in there. It's pushing the whole industry lower, but this is how fortunes are made when you're buying stuff at these levels. This is what private equity firms do. They're able to go into Europe during a credit crisis when you and I couldn't do it. We couldn't buy all the assets and a lot of the assets because they had to reduce their balance sheets because new regulations came in and they were buying shit for pennies on the dollar. I couldn't do that, right? You couldn't do that, but these hedge funds can. These massive private equity firms can. General Growth Properties. I mean, look, who was it? Ackman, 1,000% returns. You could really buy into that as an individual investor, but that's what they do in markets like this. They take things that's saying, hey, this is an industry that's going to be around forever. It's not going away. A lot of good assets. The survivors are going to be great years from now, and it could be even sooner. So if you're looking for speculation in a market where you get crushed speculating because so many names are overvalued, this is an industry that if you're really a believer over the next couple of years, there's a lot of value here. And it could be an incredible amount of growth over the next few years.